In this stock analysis video, I will share with you my simple investing process which has helped me get a consistent return of over 20%. During our stock analysis, we're going to explore the key pillars, examine the ownership, look back at past results, we'll find out what the analyst predictions are, as well as giving the business a valuation, and examine the potential return on our investment, and finally we will summarise our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests that these are the key metrics when first evaluating a business. The first pillar we are going to explore is the earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. Earnings per share is down by 173%. Now let's look at the free cash flow, which is the money a business can generate from its operations. Free cash flow is minus 1%. Then we come to the next pillar, which is revenue, and this tells us how good the company is at generating income before deducting expenses. Revenue is 2%. Book value is calculated by subtracting the total liabilities from the total assets, and this indicates the equity growth for the company. Book value is minus 44%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and the return on equity. These two measures allow us to assess a company's efficiency at allocating capital under its control. Return on invested capital is minus 8% and return on equity is minus 35%. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. This would take about 4.5 years to pay off the debt. In this next section, we will now focus on other key metrics which will help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. Gross margin is 76%. Next we come to the operating profit margin. This tells us how much profit a company makes on a dollar of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. Operating profit margin is minus 13%. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for a company that has a free cash flow yield of 5% or higher. Their free cash flow yield is incredibly high at 14.9%. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. And their book value growth is minus 17%. Ben Miller believes earnings growth is the biggest indicator to a company's stock price. Their earnings growth for the last 5 years is minus 111%. I've included a link if you want to check out the investors page and see the annual report. This is Bitesize Investments, giving you a step-by-step approach to your investment journey. There are currently 2 super investors who own this company. Bill Miller has recently bought Bristol-Myers Squibb in Q1 of 2024. He has about $3 million invested in them, and this makes up 2.24% of his overall portfolio. However, one other super investor has sold shares. The Carr brothers have previously bought Bristol-Myers Squibb shares, but in Q1 of 2024, they sold 0.2% of their stock. They have about $45 million invested in BMY, and this makes up 6.69% of their overall portfolio. Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that in general, Bristol-Myers Squibb stock price has averaged about $45 over the last 10 years, but the pandemic enabled them to reach some unusual heights for this company. It would now appear they are returning back to the pre-pandemic norm. On average, the analysts believe that the price target should be about $53, but some believe it can go as high as $84. Analyst reports suggest that Bristol-Myers Squibb is probably undervalued at the moment, and the overall consensus is that Bristol-Myers Squibb is a hold. Collectively, the analysts believe that the company will get back to growth, but some incredibly different views ranging from 5% to 1,000%. Now I'm going to create a valuation for this company. For most companies, I tend to use an earnings per share growth model, but for this one, a discounted free cash flow valuation is more appropriate. In this model, I've used the average free cash flow for the last 5 years to help create a future projection and give me a terminal value. Without going into too much detail, I've used a perpetual growth rate of 2.5% and calculated the weighted average cost of capital to be 4.83% to work out today's value and the fair value of equity. This therefore gives me a sticker price of $13.57. Then I've applied a 25% margin of safety, which gives me a buy price of $10. If you found this video useful, click on the link to check out my last stock analysis. The return we would receive if we had bought at the 52-week low of $41 and sold at the market high of $67 would be 53%. We could see a return of 570% if we were to buy at our margin of safety price of $11. But in my opinion, it's unlikely that Bristol-Myers Squibb will hit this sort of height again for quite some time. Bristol-Myers Squibb has a wide economic moat and a strong portfolio of biopharmaceutical products which they sell worldwide. However, their expenses in the last quarter have been larger than their gross profit and therefore they've been operating at a loss, which is why their stock has fallen so much. Another factor for this occurrence is that some of their best patents have expired or are about to, which has resulted in some previously guaranteed income to now stop and has given them a negative outlook for this next year. However, they do have an incredible free cash flow yield at the moment. If you've enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now, we'll summarise what we found out about the company. When reviewing the key pillars, Bristol-Myers Squibb scored 2 out of 12, and under ownership, 2 super investors have bought in the last few quarters and 1 have sold shares. Their share price is currently in a downward trend, and analysts are indicating that Bristol-Myers Squibb is a hold at the moment, and the realistic predictions are between -5% and 5% in the next 5 years. Using a different valuation model, as my personal buy price would be $12 or less, and Bristol-Myers Squibb have a wide moat. My final overall rating is 2 stars out of 6, and I've given this a category D rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comment section to help me develop the content I am creating. And don't forget to like and subscribe.